Hello Sector Watchers, welcome to the show. This is the 174th episode of Sector Spotlight for Tuesday the 9th of May, and I'm recording it on Monday the 8th. My name is Julius Kempenaer, and this time I am back in Amsterdam and presenting from my own desk. So not in the studio in Redmond anymore. We're back to my own rig. Last week was nice, but this setup has served me for 173 episodes, so I assume I can do another 100 at least. In the past shows, we've looked at the sector rotation model, we looked at seasonality, we looked at the monthly charts, but we didn't do a lot of work on what's actually going on in the markets right now. And that's what we're going to do this week. We're going to take a thorough look at the current status of asset class rotation, and then move on to what's happening in sectors and sector rotation, dividing the universe into offensive, defensive, and sensitive sectors, and see how they move together and what it can tell us about the move of the S&P 500 as a whole. Ladies and gentlemen, this is Sector Spotlight. Let's kick off with a look at the asset class rotation as it is currently playing out. We have the weekly RRG on the left hand side and the daily on the right hand side, and immediately you can see how the rotation of Bitcoin, which I use as a proxy for crypto in general, is kind of distorting that asset class rotation picture. It's way to the right, very high levels, and deep inside the leading quadrant. Is recently losing a bit of relative momentum, but that doesn't damage the strength of the asset class as a whole in this time frame. So let's move this out of the way for now, so we can get a better handle on what's going on with the other asset classes on a weekly scale, and then we can see a pretty clear picture of strength for fixed income. So we have GOV, we have corporate bonds, and we have high yield bonds, all moving in a pretty much positive RRG heading. They're definitely picking up relative momentum, and we see SPY losing relative momentum and to a lesser degree relative strength. Everything is taking place very close to the benchmark. So although these moves may seem quite big, they are in the near term, and I will show you a chart of SPY versus IEF later on, and that shows you that these rotations are all taking place in a very narrow range, very close to the benchmark. So these rotations are definitely there, but they're definitely not like major rotations. They're not like making a major move in favor of either asset class. What we see on the left-hand side of this weekly RRG, we see the US dollar, which picked up and then today basically is lost a little bit, but the bigger trend is still there. We have to see how this goes for the rest of the week, because as you know, that last hook here can change during the week. This is a weekly RRG. It will get updated with new data every day of the week, and only on Friday that last node will be the definite position of that tail. GSG and DJP are picking up relative momentum, but they are still very far to the left-hand side of the RRG, making them relatively uninteresting. So this more looks like a hiccup within a longer-term downtrend. Relative downtrend, that is. If we then move over to the right-hand side of this graph, then we can immediately see, if we stick with commodities for the time being, you can see DJP and GSG moving deep into the lagging quadrant, and that is definitely going to hurt the increase that we've seen here. So depending on how strong that move will continue, it is possible that it will make these tails roll over inside, improving and move further down. That would be a bad sign for commodities. Or when these daily tails are picking up quite rapidly without damaging these longer term ones, they could actually start to reinforce that improvement in commodities. But as I said, it's all still very far away, very low on the RS ratio scale. Quite careful with commodities at the moment. If you look at the US dollar, then you can see that there is a slight loss of momentum here that's causing that little dip that you see here in that last node. If the US dollar rolls over on the daily and starts moving back to lagging, that would be a negative sign. And we'll look at the chart of the US dollar in a minute, and you can see that it's still at a pretty crucial level, in my opinion. If we look at the more major asset classes, which is basically government fixed income, then you can see that they're confirming and reaffirming the rotation that you see on the weekly. You see that SPY has started to lose relative strength here. On that daily, RRG is now rapidly moving towards the lagging quadrant, and you can see that bonds, corporate bonds and high yields are all moving to that right-hand side. So in the near term, despite the fact that it's all taking place very close to the benchmark, I think that we'd be better off with an overweight for bonds over stocks, but only really marginally, because it's all taking place so close to the benchmark and so close to each other. A more interesting move is now seen in Bitcoin, where you can see that the shorter term rotation is picking up again, and it's basically getting back into shape, confirming the strength of crypto as an asset class for the time being. Now, if we look at a few of these individual charts, and I said we're going to look at the US dollar, and I'm going to highlight the US dollar right here, and you can see how that 101 level, 101, 101 and a half is a pretty crucial support level for the dollar index. It's a very long-term support level. It's been respected a few times, and the longer it takes before it breaks, the bigger the odds that it's actually going to be a support. So basically we're hammering out a very strong support level as long as that level is not taken out to the downside. That is better visible when we look at the chart of the euro dollar. And here is the weekly version of that chart, and you can see that 110, 111, that area is becoming increasingly more important. It's a very long-term resistance level, and we broke it, and we're now testing it from below as resistance. And so far we haven't been able to decisively break above it. If that happens, then I think we will see a quite rapid rise towards 115, but it hasn't happened yet. And for the last, this is 4 weeks, euro dollar has been trying to push higher, and it marginally peaks above that 110 level, but never decisively breaks higher. And it translates into an RSI, and I don't think this qualifies as a negative divergence, because the in-between low here dipped towards 50. I'd like to see divergences take place, something like this on the positive side. So without that RSI going in the neighborhood of 50 or even above it. So in the case of a negative divergence, in the neighborhood of 50 or below it. And that happened here. Nevertheless, it is roughly at the same level. So that is confirming this pressure on the market, if you wish. If we look at that on the daily, then we can see a little bit more granularity. And again, you can see the same pressure on that RSI. I don't think it qualifies as a negative divergence, but it's certainly not confirming the slightly higher highs that we've seen on the daily chart for euro dollar, peaking around 110.96. And as I said, the longer that barrier remains in place, the bigger the odds become that it will eventually roll over, because buyers are basically using all their ammunition to buy euros against dollars. It isn't pushing higher, so eventually the supply of US dollars, or the supply of euros, will then actually prevail, and we will see a bit of a downside move. Again, 111 probably the most important level to watch in the euro dollar chart, and on the downside you can pretty much look at all these lows here for support levels and potential triggers for a downward move. We go to SPY, then that chart has evolved into a sideways range, and it's quite broad range, it's actually two ranges, one smaller and one bigger. And if we look at the smaller range, that is pretty clearly defined between, let's round this is 373, this is 379, let's say 375, somewhere in that neighborhood. And on the upside, it's around 416, 415, 416. You can see how the lows are coming in and how the highs are coming in. Relatively closely above 415 is 428, 430, 428. That's the previous major high that's going to play a role in case of an upward break. And on the downside, there is actually a range coming in. I think this is the 360 area and maybe 345, although that's a little bit less pronounced, but 360 for sure can be seen as a very important support level. So SPY in a range right now, having trouble to push higher, so same story as we saw with the euro dollar. If it doesn't really push through, then we will probably see a bit more of a corrective move. And within that range, you can go to 375, 380, 375 without really, making any significant move, signaling any significant direction. And if you look at the RSI, that's just hovering around 50, going to 60 on the upside, maybe 40 on the downside. No real direction visible in that chart. Now, if we go to the daily version of that SPY chart, you will see the same levels annotated, but here it becomes visible that over the last week and a half, around 404, a new support level has been established. And I am watching that 404 level as a potential trigger for a further move down within the range. It'll be a shorter term move. It won't be a massive change of direction for the S&P 500, but I do believe that when we see a move below 404, it's very well possible that we will move lower towards 380. That doesn't change the fact that the S&P has broken its downtrend. So all in all, sideways move, all the battles are being fought between support and resistance in that trading range. And you can try to play some I would say smaller trading opportunities between those ranges. Right now you're on the upside, so it makes sense to actually look for a downside move, as I said, below 404 to participate in a potential move towards 380. If we take out the upside, the next level is already waiting around 427, but then things will definitely start to improve. We're not there yet for the time being. Be very careful. Take 404 as a trigger on the downside. Something similar happening in IEF. We've been watching that 100 area for quite some time here in Sector Spotlight. We do need to break higher. We do need to go above that 100.6, 100.7 to actually create a push and see bonds moving higher and yields moving lower. That is currently not happening. And again, the longer it takes to take out that upside resistance, the bigger the odds are getting that we will see a little bit more of a corrective move. And if I look at the low here, that is 97.98, let's say 98 flat. If that is taken out, then it's very well possible that we see another test of levels around 94, which would push yields higher, which is not really what the market likes. Here's a quick look at commodities. This is DJP. It's hovering above support, but this is not a very reassuring chart. If you look at relative strength against VBINX, we're actually still in that downtrend. That little uptick here is because of the decrease in downside momentum, but we're not seeing anything positive yet there. Look at Bitcoin. We saw that the asset class as such, Bitcoin as such, is doing really well against VBINX. If you look at the price chart of Bitcoin in itself, you can see that it's having a lot of trouble taking out that broad resistance range that is visible around 30,000. It's pretty much more of a range between 27.5, 31, 31.5. It's a pretty broad range, but it's a massively important range, especially if you look at the monthly chart. And in the near term, we see some weakness coming in with lower highs in place. Today we're actually breaking below that previous low that was 27,680. We're now going below that. We dipped below that. If we take out that trend line right here, which is around 27,000, then I think that we could see a retest of 25,000. 25,000 was that important overhead resistance. Once broken, we got the rally. It's very likely that that level will get back as support once we break 27,000. For the time being, we're still in that range. The thing that you want to look for to participate in a major move of Bitcoin is when it decisively takes out that overhead resistance area. As I said, I realize it's a very broad range, but that's what crypto is doing, making these very broad ranges. 27.5, 28 on the downside, 31,000 on the upside. If we can decisively break that and hold that level for a couple of days, then I think we're ready for a bigger move of Bitcoin to the upside. We're not there yet. And here we got, this is a chart that I wanted to share with you. This is the equal weight S&P 500 index. And as you can see, it's very, very similar to SPY, not surprisingly. But what triggered me was the fact that the relative strength of RSP, which has been doing really well against SPY over the last 3 years, is now moving lower. It's now moving to the downside. And you can see how these RRG lines are moving over. So what this tells me is that the bigger names, because SPY is cap weighted, it's driven by the bigger names, are getting more important to drive the price of SPY higher, and especially in terms of relative strength versus RSP. So for now, the preference is for cap weighted SPY over equal weighted RSP. And then finally, here is the chart that I told you about earlier on. This is SPY against IEF. That's the stock bond ratio that we always look at. And you can see that basically since the start of 2022, this is in a trading range. Not much has happened. So no real benefits would have been gained from taking a massive over or underweight position in either stocks or bonds. The game is played between those ranges. And for the next big move, we just simply have to wait where this ratio will break out to. And it's very hard, if not impossible, to say in what direction that will be. So what about sector rotation? I have broken down the universe of the 11 sectors into 3 separate groups: offensive, defensive, and sensitive. And I want to go over them both on a weekly and a daily scale to see which forces are pulling on the S&P 500, and if we can get any handle on the general direction of the S&P 500 from that. So this is the group offensive or cyclical. That is consumer discretionary, financials, real estate, and materials. Here's the weekly, and here's the daily. And what you can see is that in general, that move is in a negative direction. You can see all these 3 tails here: real estate, materials, and financials, all moving inside and further into the lagging quadrant at a negative heading. And you can see that XLY, consumer discretionary, is still inside leading, but only marginally, and it's rapidly losing relative momentum. So quite easy to see that at this level, the relative strength for this group as a whole is not very good. Now, if we look at that same group on a daily scale, then we can see one thing that I think is very important, and that is that the rotations for materials and financials are absolutely confirming the rotations of those sectors on the weekly scale. And if you remember, last week we spoke about seasonality, these are the two sectors that are expected to underperform the S&P 500 in the month of May that we're currently into. So that seasonal pattern is definitely working together with the actual rotation. If we see consumer discretionary, that is, not doing much. You can see here how that is like a little bit zigzagging, coming very close to the benchmark. Just what's like happening here. So there's no clear rotation for consumer discretionary, and real estate is actually right now smack in the middle at the benchmark, and you can see how that negative rotation on the weekly is tracing out. So I wouldn't be surprised if we would see real estate moving back into that lagging quadrant. All in all, for the group offensive/cyclical sectors, the outlook for the coming weeks, I think, is not all that strong. If we go to the defensive group of sectors, and then we have again the weekly on the left, daily on the right, and defense is defined as healthcare, utilities, and staples. And just one look at this graph and you can see that all these tails are rotating in a positive formation, a positive, tracing out a positive trail. They're all at a strong RRG heading, meaning a heading between 0 and 90 degrees. Staples is almost crossing over into leading. Healthcare is just crossing over into improving, and utilities is right in the middle of improving and moving towards leading. So all in all, this group is doing pretty good. If we're looking at the daily version of this group, then it's pretty much the opposite. You can see how utilities and healthcare, after a bit of a jiggly move through weakening, are now on their way towards lagging, and how consumer staples is rolling over inside the leading quadrant. So pretty much as a group here, I'd say that this is actually offsetting the strength that we're seeing in that weekly. So from defense, it's a bit contradictory, so there is not much to say. So there's a very clear move out of offense. There is on the weekly, there's definitely an influx into to defensive sectors, but on the daily, that's sort of negated, at least for the near term. So there's not a very strong signal, a very strong guidance from the daily RRG. So the key, I think, is in the hands of the group of sensitive sectors. And that's communication services, technology, industrials, and energy. And if we look at the weekly version of that chart, then you can see how communication services and technology are actually right at the same spot. The tail is not exactly the same, but where they are right now is pretty much the exact same spot. And you can see how industrials and energy are moving the other way. So this group is kind of split in two ways. The only distinguished difference is that technology obviously is a massively big sector. Communication services and industrials are kind of similar, and energy is really small. So the benefit, the pull from the weight of these sectors is coming from the technology sector, and that's actually doing pretty well. If you look at the daily, then it gets even better, because now the communication services and technology tails are totally confirming the strength that we see on the weekly. So here the weekly, you saw some weakness over the last 4 or 5 weeks, but that is now coming back. On the daily, they're coming back and they're showing one of the strongest possible rotations right through into that leading quadrant at a strong RRG heading, while industrials is rolling over and moving its way into lagging, and energy is actually continuing its way. So if I take a higher level view using these three groups, then I think that there's a very clear rotation out of offense. Defense is sort of undecided, weekly positive, daily kind of negative. And if you look at this group of sensitive, then I think that it's definitely technology, and to a lesser degree communication services, that is making a difference at the moment. And for that reason, I want to wrap up the show with a look at both individual charts for communication services and technology. If we start with communication services, then we've been looking at this chart for quite a while. This looks like a massive inverted head and shoulders that's on the verge of breaking. Relative strength is definitely in favor of that, and what we're looking for is a break above $60 US, I would say. And if that happens, then there is a lot of upside potential for the communication services sector to be seen. Now, technology, obviously a way more important sector in terms of cap weight than communication services, is maybe even stronger, because look at the relative strength here that has just tested its old resistance as support, now moving higher, and look at what's happening here around 150. We're testing that area for 1, 2, 3, 4, 5, 6, and this is the 7th week. And the high here was 151.51, and last week was 151.75. So 151.75, 171.50, 152 is definitely an important level. If this week can break above 152 and stay there at the Friday close, I'd say that is a pretty significant signal for the technology sector, and that will definitely start driving the S&P 500. And as you know, that technology sector as well as communication services are in that group of sensitive sectors, which I think are currently going to be the main driver for the S&P 500. And that wraps up the show for this week. Thank you for watching. Remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show live on StockCharts television or catch a replay on our YouTube channel or any of the on-demand apps. Please let us know what you think by either a thumbs up or a comment in the discussion section. We love to hear from you. Looking forward to seeing you again next week, same time, same place.